and as I keep saying, I am going to get to the US markets in a moment, and I'm going to present a possible alternative to what's happening in the US markets, which positions the 20-week cycle at in the end of January, I should say. There we go, at 17 weeks. Now, that might sound like a short cycle to you because we're talking about the 20-week cycle, but in fact, 20-week cycle is just an easy name for it. The actual average length across all markets, across the whole world, across many, many years, the average length of what we call the 20-week cycle is in fact between 17 and 18 weeks. Okay, so I believe the 20-week cycle quite possibly occurred at the end of January. And I see a question a comment from Alain. It seems that the underlying trend of the 54 months is neutral or slightly up, which would explain that the reading of the markets since March 2009 is relatively easy. Yes, exactly, Alain. I've been speaking about the underlying trend as presented on this chart and saying that we only have evidence of the 54-month cycle and no longer cycles. But as you mentioned, the underlying trend fits perfectly the picture with the 54 months. And it's not confused by any longer cycles, which makes the reading of the market really quite easy. And it's why I've always found it really important to analyze markets in separate countries around the world. And next week I'm possibly going to take a look at either the DAX or the CAC 40 or a European market. I'm going to avoid the Italian market, which is a casino, as they say in Italian, which means a mess. It's not a very healthy market at the moment. But it's very useful to look at markets in different countries in the world because of the different shapes. And today's Trader Chat has a punchline to it, I hope, which I believe is really fascinating, which has to do exactly with what Alain is speaking about. The Australian market is really quite easy to read, as Alain points out. And that is because there are no contradictions in terms of the shapes of the cycles and the underlying trend. The American market currently has a few contradictions. And so it's really fascinating to look at a market in another country of the world which has many similarities but some really fundamental differences. And so the first fundamental difference that I'm going to come back to, I see a comment from Steve. Let me just finish this sentence and I'll get to that. The first major sort of difference between those markets is that the positioning of the 20-week cycle in the Australian market really makes a lot of sense in early March, even though it's a long cycle at 22 weeks. The end of January in the Australian market is marked as a 40-day cycle, but I think you can see there it's simply not a very prominent trough at all. And positioning a 20-week trough on the 30th of January in the Australian market is something that's kind of hard to do for a Hurst analyst because it just doesn't make sense. It doesn't look like a very good trough. So there's a really interesting difference between the US markets and the Australian markets in terms of the relevant troughs, the respective troughs on the 30th of January and in early March. See a comment from Steve. The shape of this 4.5 years seems very bearish, with the top being in the first 80 week, which seems to indicate the 2009 low will be breached. That's an interesting comment to make. Let's just go back at that and have a look at that. As Steve says, the shape, and let me pop up the semicircles, which makes it quite nice to the current 54-month cycle is developing a bearish shape. As I've mentioned a few times today, in terms of the shape of the cycles, there are two things. The two obvious things to look at are first of all, where is the peak of the cycle? Does it occur early or late? But secondly, where is the trough? Now, the second piece of information, of course, unfortunately, you only know after the cycle is complete. And so what Steve is doing is is looking at one piece of evidence, which is the peak, which in the Australian market in early 2010. In the American markets, very interestingly, it only occurred very recently. So Steve is saying that this is an unfolding bearish shape, which it is, because it has an early peak. However, one has to be a little bit careful because we have not yet seen the formation of the trough. And if the trough of the 2013 or the next trough of the 54-month cycle does not come below the trough in 2009, then we would have another mixed cycle shape with an early peak and a higher trough, which would indicate neutral underlying trend, and it wouldn't in fact be, strictly speaking, a bearishly shaped cycle. If you're an advanced sentient trader user and you've done the workshops in sentient trading methodology, you will know you define cycle shapes as either bullish or bearish, and a cycle shape can only be fully defined after the cycle is completed. And if the trough that we're moving down towards early 2013, if that trough forms above the 2009 low, then we would have a mixed cycle shape forming. So it wouldn't be true to describe this as a bearishly shaped 54-month cycle. But certainly, the present scenario is an unfolding bearish shape, although it's not yet a confirmed bearish shape, just in response to Steve's comment. But as he says, if the price by the end of this year or early next year drops below the 2009 low, then we will be left with a fully bearish cycle. I actually think, and again this is speculation, it's not hard fact, I actually think that the chances are that trough will form above the 2009 low. Why? Because in fact the 54-month cycle that's developing in the US markets, as I am going to show you in a moment, is unfolding as a bullish shaped cycle. The 54-month cycle currently in US markets is bullish. So it's more likely that the Australian market will develop a mixed cycle shape with an early peak and a higher trough than that it will form a bearish cycle shape. That's a matter of opinion, and we could talk about it, but we'll probably have to move on for now. I see Alain has a comment. The succession of the 3 18-month cycle up and neutral and bearish is the triad lecture of the markets explained in the Psychology of Successful Investing of Tony Plummer. Okay, that's very interesting. I've read that book. It is a really interesting book. Plummer's Psychology of Successful Investing. Interesting comment there, Alain. I've never really connected the two. Right. So let's just complete. Where were we? Okay, we're taking a look at the near-term detail. Okay, I always turn off the semicircles when I get into the near-term detail. I was talking about the positioning of this 20-week cycle trough, which I'm going to show you in a moment. In the US markets, probably should not be positioned in early March, but should be positioned towards the end of January. But in the Australian markets, it really makes sense to position the 20-week cycle trough in the first week of March, as you see. So if we zoom in and have a look at what's happened there, the market has been forming a very well-defined cycle shape, as you can see. And if we count the bars from there, you see that 64 bars or 64 days have elapsed since the 20-week cycle as defined in this particular analysis. And so the market is now, of course, approaching, as you can see, an 80-day cycle trough, again, according to this analysis. So there is the 80-day cycle trough. The 80-day cycle currently in this analysis, as you can see on the right-hand edge of the chart, is running at 89 days. That's a very, very long 80-day cycle. And in fact, we would expect the 80-day cycle to return to its average length of 68 days. So instead of running long to 89 days, I tend to expect a cycle to have a reversion to the mean and to actually run, if anything, slightly short. So I think potentially we're going to see the formation of the 80-day cycle trough quite soon in these markets, and as you can see, the markets have been heading down fairly sharply down to that point, and so we need to be looking for a formation of the 80-day cycle trough really very soon, and so we're expecting a bit of a bounce. And in fact, there was a really positive bounce in the Australian markets today. That's if Yahoo Finance is to be trusted in terms of their quotes of today's prices, which are still preliminary quotes because the market only closed a few hours ago. But the preliminary quotes indicate that the market opened at the low of the day and pretty much spent the whole day sort of moving up and closed at the high of the day. That's a pretty bullish sign, and possibly could represent the formation of the 80-day cycle trough today. But I am completely speculating, and it's a very dangerous thing to do. How will we know when that 80-day cycle trough has formed? I'm just going to count the bars from the most recent 40-day cycle so you can see that distance. How will we know? Of course, by using our trusty tools, the FLD and the VTL. And let's see which tools here might indicate to us when that trough has formed. Let's keep it simple. In terms of the 80-day cycle, we need to look at the 40-day cycle VTL. One thing at a time. There's the 40-day cycle VTL. There is not a downward VTL because Sentient Trader cannot draw one. There isn't a valid trend line to be drawn, downwards pointing valid trend line, so therefore we can't use the VTL. But we could use the VTL possibly for a shorter cycle. No 20-day. There is a 10-day cycle VTL, which you can see is only just a little bit above price. So if prices tomorrow manage to climb above 43.07, then we would have seen a crossing of the 10-day cycle VTL, which means that a trough of the 20-day cycle has formed. Probably, if a trough of the 20-day cycle is formed, because we have witnessed 64 bars since the most recent trough of the 20-week cycle, if a trough of the 20-day cycle forms, that is probably the expected trough of the 80-day cycle. But I'm going on a bit and getting into probably too much detail. But let's have a look at these. How do we know a trough of the 80-day cycle is formed? We look at the 80-day cycle FLD. Price is only just poked below that FLD, and we should be looking at median price, of course. There's median price. It has only just today poked below that FLD. We would only have confirmation that the trough has been formed when price crosses up above that FLD. You can see that blue line there. What about the short cycle? We would have confirmation that price has formed a trough of the 40-day cycle when it crosses there, and there's 20-day cycle FLD. Okay, so that is when we will know with confidence that a trough of the 80-day cycle has formed, because that is what we are expecting to happen in the markets. What should you be doing trading-wise at the moment? Certainly you should not be thinking of going short. Many people say to me, and I have conversations about this every week, many people say to me they don't understand Sentient Traders recommending that they buy, and the markets are clearly falling. And in Australia, the markets are clearly falling. When trading according to Hurst cyclic principles, you must look ahead. It's too late for you to go short this market. We're expecting a trough to occur in the next few days. It's too late if you're trading on an end-of-day basis. If you're trading intraday, of course, it's another story. But trading end-of-day, it's too late to go short this market. What you should be thinking about is possibly going long, bouncing out of the 80-day cycle trough. I wouldn't want to go long bouncing out of the 80-day cycle trough because of the status of the longer cycles. The 80-day cycle is heading down. No, I beg your pardon, the 80-day cycle will be moving up, but the 20-week cycle is heading down and the 40-week cycle is heading down. There's quite a lot of downward pressure on the market, and as already discussed, I expect that this peak over here will not be surpassed. But that is only an expectation. It's not an absolute hard fact at the moment. See a comment from Jitendra. However, we could not have shorted based on the FLD crossover, which has not yet happened on the 40-day basis.